And one of the best pieces of advice that I received was, if possible, if you're able to start trading in an IRA, then and make that grow, you won't have to pay taxes on it for a long time.
Hi everybody, it's Lynnette Khalfani-Cox, the Money Coach.
And I'm Teri Ijeoma, founder of Trade and Travel.
This is the show where we break down for you all the things you wanted to know about investing, because we want you to grow your wealth, okay? Who doesn't want to get a little bit richer in life in all aspects?
Make it rain, make it rain.
Make it rain, make it rain. Richer with your money, richer with your
mindset,
with your
everything.
health, with your relationships, with your mental health, all of it matters, okay?
Yes.
But today's topic is about 401ks. And I know some of you are like, what exactly is a 401k anyway? And how does it work?
Yeah.
I think I have one on my job, or I have some kind of retirement plan, but how exactly does it work?
It's crazy because the first paper they give you when they hire you is, okay, let us know what you want to do for your retirement. And a lot of my friends are like, Teri, what do I put on that?
I don't know
like,
what is this?
Yeah. Like, what's going on? So glad that we're going to be covering this today.
Yes, and they really expect you to kind of know what to do. And frankly, we get it. We know that most cases people don't know what to do. So we're here to make it make sense for you and to break it all down. So first, let me tell you what a 401k plan is. And I should also reference actually that some of these definitions apply to other forms of retirement savings plans as well, like 403b plans, 457 plans, thrift savings plans. Again, those are other alternative retirement plans that apply to folks who work in, say, nonprofits or for the government, et cetera.
I had the 403b when I was in education and in nonprofits.
Okay, excellent. So right off the bat, a 401k is an employer-sponsored, tax-advantaged retirement savings plan. It's a way for you to put aside money on a pre-tax basis and then to add to your retirement kitty down the road for your golden years, but to reduce your taxable income right now for the current year, okay? So let me give you an example. You know, you can sock away in this year right now, the year of our Lord 2022, you can sock away as much as $20,500 in a 401k or 403b if you're under 50.
Which is amazing, by the way. It's gone up several times over the years.
Yes.
Like, it used to be like 18,000, then 19,500.
They adjusted.
Now it's 20.5. That's good.
Yeah, that's a lot of money to be able to sock away, you know. And most people actually, to be honest, won't hit that number. But you actually can. We're going to tell you some ways that you can hit that number. If you're 50 or older, you actually can take advantage of so-called catch-up provisions in the law that allow older people to be able to sock away even more. So if you're 50 or older, you can put away an additional $6,500 a year into a 401k, a 403b, etc. So hey, y'all can, sock away $27,000. That's a good little amount of money to be socking away, right? Retirement.
For retirement, and
Absolutely.
Then the benefits you're going to talk about later about it.
Yes,
that's great.
Yes. So. Why does this make sense, and how does it work, and what would you want to do? Well, the way it works is that you designate a certain amount, a percentage amount or a dollar amount to come out of your paycheck each and every pay period, and it gets withdrawn automatically. The amount that is withdrawn at the end of the year, it's kind of tallied all up, and that amount is actually deducted from your taxable income. So just as a round figure, let's say you're making $80,000 a year. And let's say you actually did put aside $20,000 into your 401k plan. Again, that money was taken out in a tax advantaged way. So that $20,000 is reduced from your $80,000 gross income. Now you're only taxed on $60,000.
Which is huge
That's
difference.
big difference.
Yeah.
So you owe Uncle Sam a lot less money. So you're able to essentially kind of write off those contributions that you make in the current year. So that's a big benefit. And that's one of the reasons that participating in and contributing to a 401k matters.
You know what, Lynnette, as you just said that, I thought about the tax brackets. Like, you guys should really be mindful if your income is just above a tax bracket, like using this to lower your income to the lower tax bracket could help you immensely. Now that you're paying even a lower percentage of your overall amount as well.
That's right. It makes a big difference, especially if you're borderline. So another reason that 401k plans really matter a lot is, of course, they're going to give you security later in life. I cannot tell you how many people have not saved enough for retirement, okay? We know this from every data source under the sun. The Federal Reserve, organizations like EBRI, which is the Employee Benefits Research Institute, every investment and mutual fund company says Americans do not save enough for retirement. And we're going to have a retirement crisis on our hands if folks aren't saving enough for the future them, right? So you don't want to have to just rely on Social Security, because that's going to be like a $1,200 or $1,300 a month, maybe an $1,800 a month check, in the future. That's not enough for you to live on. So part of the value of a 401k is to save some now to have a more secure future. Okay.
And another reason why they're important is because many times your company will do a match.
Hello.
So you get free money too.
Hello.
I remember at my companies, there was a match of about 5%. So I made sure at first to put at least 5% of my salary into the 401k, and then they would match that. And I got all this free money that I could use later on. So that's another benefit of investing in your 401k.
Do you guys understand the power of a company match? I mean, this cannot be overstated. Where can you get a 100% return on your money guaranteed? If your employer is saying, put in 2%, 3%, 5%, and we'll give you a dollar for dollar match, even if you put in $4,000 for the year and they put in $4,000, now you've got $8,000 put into your retirement plan. And again, that's 100% gain on your money just for you being willing to make that little sacrifice and go ahead and put that money aside.
And then it's making interest. So like then they're investing $8,000 for you on your behalf, and it's growing. And make sure you check out one of our other videos about like index funds versus mutual funds, because you can figure out how you want to divert that money. But that 100% return up front is amazing.
Phenomenal, right? Phenomenal. Another reason that 401ks matter and are important is that we're in a new era of the workplace where the employee is called upon to determine his or her own retirement security. Gone are the days where, pensions were the norm and where folks had so-called defined benefit plans, right? Where they said, here, at the end of your 20 or 30 years of service, we're going to give you a gold watch, and here, this is what your benefit is going to be. In the future, we're going to give you X amount of dollars in retirement for X number of years or decades. Now you're looking at more defined contribution plans, like 401k plans, where you're setting here, this is the contribution amount, and you're being tasked with not only managing that, picking the right investments or the assets that you want to invest in, but it's a whole different shift. And basically the onus is upon you. Right? You have to take charge of your own retirement security. And honestly, at the end of the day, is anybody going to care about your money more than you do?
No.
I think not.
Never.
I think not. So you really do need to be proactive about making sure that as soon as you are eligible to contribute to your workplace plan, you absolutely should go ahead and do so.
Yeah, this was huge for me too when I started investing on the side. So if any of you guys know my story, I was assistant principal of an elementary school, and I started trading while I was at school. For about a year, they overlapped. So there was a time where I maximized how much I put into my 401k because I knew I also had income coming from trading. And then even before that, when I was in ministry, I had income coming from real estate. So I would put everything I could to make my my salary looked lower at tax time because I knew I would have to offset this other income. So if you do have the side hustles and the multiple streams of income that we often talk about, make sure that you use this total advantage of the whole $20,500 if you can, or at least put at least to your company's match in your 401k.
That's right. We also wanted to talk about the idea of using a 401k in other ways. So I know you were able to switch it over to a self-directed IRA. And I know that I, as an entrepreneur, my husband and I both, we have a so-called solo 401k plan. And again, that's a plan for entrepreneurs. It actually has even higher contribution limits, which I love.
Yes.
I happen to be the owner of an S corporation. I won't get into all the
ins and outs of it.
Specifics of all of that. But just suffice to say, for federal tax purposes, we own an S corporation, and it simply means that we get both dividend or K1 income as well as W2 income. So I'm able to make contributions as both to my solo 401k plan as both employer and as employee.
Oh, I did not know that. That's good.
So it allows you to make really high contribution amounts for us in excess of 50-something thousand for each one of us.
Per year.
Per year.
Wow.
Yeah.
That's good.
Up to like 60,000, I think it is. Don't quote me on the exact number, but it's a high number.
Consult your CPA.
Yes.
And also disclaimer, this is for educational purposes only. But just know if you're an entrepreneur, you should be setting up a solo 401k so you can contribute at least up to 50,000.
Yes. And it's more than 50,000. It's in the something like 60 something. So it's up there.
Yeah. So a couple things when we talk about our 2 cents, like let's go into our 2 cents. How have you, this would be a question for you, and I'm going to say too, how has having a 401k benefited you, or even just retirement in general? And for me, I want to say that 401k for me was huge because when I left my old jobs, I moved them into a self-directed IRA. And what is that? That's a whole nother term that we need to do a show on. But a self-directed IRA, or even an IRA in general, is just a retirement account that you can manage yourself.
Right.
So I moved all of my old money that was in my old jobs into the self-directed IRA, and then I started trading it. And there's 2 different types of IRAs. You can do traditional, that means that you move the money over and it's not taxed until you sell, or you could do a Roth IRA, and that means that it's taxed when you move it over, but then later you won't have to pay tax as you take the profits out. I won't get into that. Let's do a whole nother show. We'll commit to do another show down the road for you guys on that. But the big thing was when you're first learning how to trade, it gave me a place to be safe and secure to learn. When I move that money over into the IRA, I know that I don't have to pay taxes on it for a while. So I could make that money grow, or even if I lost a little bit, I knew I'd have time because I can't touch it until I'm at least 55, right? I know the numbers, 59 and a half. So it's going to be in there for a while, but that was a great trading ground. And one of the best pieces of advice that I received was, if possible, if you're able to start trading in an IRA, then and make that grow, you won't have to pay taxes on it for a long time. So definitely give everything that you can to your 401ks and 403bs. When you leave the job, you can move those over to start trading them for yourself.
2 things to note. If you have less than $5,000 in your employer-sponsored retirement plan, they can tell you, here, you got to take it out. But if you have more than $5,000 in there, they can't. You have the option to say, I want to leave it here. In many cases, people just want to switch and move it or do something else. But if you have a fund that's actually performing
that's doing well,
right, you might want to just keep the money in there and just kind of, let it ride.
My mom is like that, by the way.
She did?
Yeah, her old employer, her old job, their fund was making like 20% returns for a while there.
So she was like, I'm keeping my money.
Leave that there.
Yeah, I'm not gonna mess with that. If it's working, don't
break it, don't fix it.
Yeah. So to answer your question about me, I want to give the good and the bad. I want to tell our audience about the ways in which I've used my 401k funds that were positive and negative. So we know that a lot of people tap into their 401k plans for a whole host of reasons. Some people borrow from them. Some people take early distributions. Some people raid their accounts outright. I did the latter. Okay.
You rated it outright? Mm-hmm. Okay.
I did initially. So in 2003, in March 2003, I left my job as a CNBC reporter. I was a Wall Street Journal reporter for CNBC. Long story short, I had noticed that I was going to be terminated, me and 200 other people. They had a massive layoff. They couldn't afford us. All the people who was making six figures, they was like, bye, y'all gotta go.
Dang. These jobs
that's corporate
ain't loyal.
America. That's
These
corporate
jobs
America for you.
ain't
That's
loyal.
corporate America. You know, I ain't mad at them. I go back on CNBC. I'm not mad at them. It's okay. And I make way more money now working for myself. So I'm not gonna complain. So anyway.
Won't he do it? No.
So, what had happened was,
tell the people.
I was starting my company. I said, okay, one layoff in life is all that I ever need to go through. And so I decided to start my own business. And so I funded my business, the launch of my business, my financial education company, largely through raiding my 401k plan. I absolutely would not recommend, and I had a nice little six figures in there, but for about a year or so, when I was launching, I wrote my first book called Investing Success. I went on tour. I went all around the country. And you know, me and my sister Debbie, we weren't staying at Motel 6. We were staying at the Four Seasons. We were staying at the
nice places.
I spent a little extra. I'm gonna be honest, okay? So, but even printing 10,000 books, publication, marketing, distribution, etc., starting my business, funding my operations, and launching an enterprise, it's expensive, obviously, as you know, as an entrepreneur.
Expensive.
So yes, I raided for the most part over the course of a year plus my 401k. Looking back, I do regret it.
Why?
I do. Well, I think that I should have looked at alternative sources of funding and other ways and tried to let that money sit, or at least a good portion of it sit, and keep growing and staying invested in the markets.
I thought you were going to say because the tax bill.
Well, that too. But, that was a whole other story. But yeah. So, but mostly it was like opportunity cost. Mm-hmm. I lost out on being able to keep that money working for me in the stock market. So that was one thing. So, but I'm good. Don't worry. Don't cry for me.
Wait, and what year was that?
2003 when I left.
And
2003.
It's grown
so
quite
it's
a bit
19.
since,
It's
yeah.
19. Well, yeah, and the last 2 decades, if I could have had all that growing too, it's been even
We
more.
wouldn't be here, y'all. She'd be on the beach somewhere. That's why we needed it to happen.
I would still
just
be
the way
here,
it
though.
did.
Honestly, I'd still be here because honestly, it can keep
do.
adding zeros to the bank account, and I love what I do as a financial educator and a money coach.
Amazing.
Yeah,
this is what we do for you guys.
We love it. Mm-hmm. So, but. Fast forward, obviously I recovered, started my business. My business has done extremely well. And again, as I mentioned, we have a solo 401k. Mm-hmm. So we've had years where we sock away $60,000 into our solo 401k. So how have we been able to use it? We also have a self-directed solo 401k. Okay. So just like you have a self-directed IRA, our solo 401k means that we are the plan sponsor and essentially the trustee of the account. So we have checkbook control over our 401k funds. I can invest in anything I want.
You can invest in real estate too with a solo 401k, right?
And I have.
Note to self.
Yes. So, and I have. If you do that through a 401k, that's called a non-recourse loan. That's a whole different kind of, type of mortgage. It's a whole different thing. But suffice to say, yes, we actually have. You have a trust established, and we have a trust. And so, yes, that's one of the ways that we've used some of our 401k funds is buying property as well.
Wow.
Yeah. So, and then of course, traditional investments in stocks, in mutual funds, in ETFs, in crypto, etc. So it's fine, and we all kind of bounced back and surpassed and went all beyond. But yes, I like the idea of having that checkbook control where really I'm calling the shots. There's some things that you can't invest in. I believe it's like some forms of art, some alternative investments. some things that are like anything that has to do with like bank securities or things like that. There are some restrictions in terms of what you can buy using your solo 401k or your or self-directed IRA. But for the most part, you have a lot of leeway to invest in commodities and real estate and pretty much every asset class that you would like.
I remember my advisor also telling me about self-directed 401ks, and I
love them. I absolutely love it.
I love the idea that you can actually put more money towards it if you're an entrepreneur, and the fact that it's a solo 401k. How many employees can you have?
Okay, so this is another thing, and this is why Earl and I have structured our business this way. There's nuances here. So again, Earl and I, we have an S corporation, and we are the only 2 employees of our company. Everybody else is a 1099 or is a contractor.
Yep, that's the way to do it if you're solo 401k.
Right. So there are provisions under the tax code that say that there's rules around highly compensated employees, which we are. There's rules around if one person has access to or the ability to be in the 401k, then everybody has to be.
Same match, right?
And so, and it's not even just about the match, it's more about the flexibility and the freedom and the control and the things that we want to do with our funds, which is why we've opted to say, I don't want employees. And so and really, it's really about the 401k. It's about like, we're controlling that. We want to run that how we want to do it. So everybody else, y'all getting a 1099, okay?
And a lot of people out there are solopreneurs. So this makes sense for you, and especially now, if you are just starting out, set up this type of retirement, be able to contribute more to it, and down the line, if you get more employees, well, then you'll have a new retirement account to structure, but you can at least start here.
And you can change. It's not like everything is 100% written in stone. It can never be amended or modified. That's not the case. Also, you might be single right now, but you might have a partner who's working with you, or a marriage partner or somebody else, and you guys can each collectively contribute your own amount to a 401k. So that's something to know. So,
that's good.
So we hope that you guys have gotten a lot out of this
Make It Make Sense episode.
Make It Make Sense episode. And we want to talk to you also about what to do next. Certainly if you're an employee and if you are a W-2 worker, get your butt in there and go contribute to that 401k plan. You know they've been after you. Even if you raise your contribution level 1%, every little bit helps.
And at least find out what the match is.
Absolutely.
Whatever the match is, try to put at least up to the match. That's free money, y'all. Who leaves free money on the table?
I'm not. Where are them dollars? Because I'm going to be trying to grab them up every time I can see something. If it's free, it's me, okay? So you should be trying to get your hands on that too. So, and then on the solo 401k front, you can definitely, if you're an entrepreneur, you can just do a Google search and look for a number of companies that establish these kinds of plans. We used a company called Broad Financial. Again, there's no affiliation or nothing that we're doing with them. I'm just telling you who we used. But there's many other ones that are quite good at setting up these plans, and that'll do it for you and show you and walk you through the do's and don'ts, because you do have to understand the requirements and how you can use those retirement funds and how you can't use them as well.
And you know what? Your bank is a good resource here too.
Absolutely.
I went straight to my bank and said, hey, I'm thinking about opening a solo 401k, and they can help you open it and be the bank account for it.
Yeah.
So
some can.
Some
can.
So ask your bank as well.
When I went to mine, they acted like they didn't know
crazy.
what I was
It is like, more paperwork, and they might need to call somebody. Like, I don't know how to do it. Let me call my manager, who's going to have to also call someone else. But you can ask them, because they might have it.
In other words, there's resources. There's experts. There's advice out there for you to get help, for you to get information, for you to understand what works for you. And we hope this has been a helpful segment to you. Be sure to hit that like button
and to
subscribe. Tell us what you learned. Also, drop a comment in here and
tell us if you are doing the match. Like, let us know if you're using your 401k.
Absolutely. Or your 403b, or your 457, or your thrift savings
or retirement
plan,
in general,
or whatever. If you have an IRA, whatever. Tell us, are you saving for retirement? And if so, why or why not? Let us know. Okay. Love you guys. We'll see you in the next one. Mwah.